You're listening to a Total Market Solutions podcast. Dekel Agri-Vision is the West African agriculture company focused on building a portfolio of sustainable and diversified projects. It's released its February palm oil production update, and joining us to talk us through the numbers is Executive Director Lincoln Moore. So Lincoln, first of all, talk me through the highlights of the report. There appear to be many.
Thanks for having me, Sarah. Yes, really pleasing February. Of course, we were hoping this would be the case. January was a fantastic start to the high season. We had 52% growth in production in January, and it's really great to frank that in February, which is obviously moving more into the heart of the high season. So to produce over 42% more CPO in February versus February last year, and to do that with obviously very supportive CPO prices, so 17% higher than the prices we were achieving last year. These are the key drivers of our revenue line and ultimately our gross profit line. So a fantastic February. We obviously have 2 more months of the high season, or parts of the key parts of the high season come, so we're looking forward to seeing that continue.
Okay, so it does, on the surface, all sound fantastic, Lincoln, but are there any areas you are looking for further improvement?
There's improvement in any business, any operating business. I think that the positives at the moment are tremendous in terms of the high palm oil prices that we're achieving and the really strong production. To take advantage of it is absolutely critical. I mean, palm oil production and sales is 90% of our revenue, so that's the key. Looking through the other lines, I think we'd love to do a little bit better on the palm kernel oil prices. The international price is a considerable premium to local prices, but even the local prices of palm kernel oil have increased double digits since January. So the local prices are starting to catch up with the international prices. We can still look at export opportunities for PKO. It's not an easy challenge because the product would need to be shipped in flexi tanks, which is more complex than with crude palm oil, and so of course also quite small volumes. So you're looking to arrange ships, but we have buying agents in India and Singapore, seeing if we can take advantage of that. It would be a small bonus really for us, as we're seeing palm kernel oil prices increase locally anyway, but every pound and every euro matters, so we're working on that as a thing we can potentially improve over the next couple of months.
It's the first time I've heard the mention of flexi tanks. Are there many of them out there, and do you get first dibs on them?
The access to the flexi tanks is okay. It's a more expensive form of shipping than traditional tank style shipping. So we have to take that into account as to whether it's worth it. The cost of shipping plus using flexi tanks, to us, we think it's around about 150 to 200 euros. So the international price must be exceeding that by a reasonable amount to make it worth our while. Obviously, risk of selling overseas in terms of payment is there, but more so than our traditional method of selling at factory gate. But as I say, the main thing people need to understand and appreciate looking at our numbers, that 90% of our sales comes from crude palm oil, and we're selling that all at the factory gate. 800 euros a tonne nearly, which is the best prices we've achieved during a high season, and the volumes 42% up since this time last year, making it setting us up really for a very profitable year.
Okay, so you talk about high season. You are moving into the heart of the peak harvest season, so I'm guessing March is going to be a critical month in your calendar where crude palm oil is concerned. Any early insights you can share with us?
You're spot on. March is typically our strongest month, shortly followed by normally April and February. Probably April normally slightly better than February. So a critical month for us in March. Obviously, prices continue to be very supportive. Last year we did record March production. I think it was something like 6,178 tonnes of crude palm oil. So the internal goal is to beat that. So that's what we're trying to do in March. And in order to work backwards to beat that, we need to maintain a very smooth operation. We're now running 7 logistics centres. We need to make sure that the fruit moves towards the mill in a logical manner, and the mill is operating at near its capacity through that period. And if we look after all those basic elements, I think we're in a really good chance of setting a record in March, and that's the goal.
But you've also got to look after the locals and maintain their goodwill. So talk me through the local initiative to shield locals from the current high prices that we've discussed.
Yeah, it's amazing at the moment. Global news, we all talk about crypto, and we're talking about the mineral prices or battery technologies, and it's basically a little bit overlooked how strong commodity or agriculture commodity prices have risen. I mean, most of the staples, so palm being one of them, soya being one, wheat, corn, canola, then we move into the meats, cattle have all increased dramatically over the last 12 months, which is putting pressure on prices. I've seen news out of Dubai where they're contemplating capping the price of beef and chicken. So this is the sort of environment we're in, and this is obviously all overlaid with COVID, where we do need to act responsibly and ensure that food prices and food inflation doesn't run away to a point where it becomes too expensive for the mass population. So in Côte d'Ivoire, it's no similar. The palm oil is incredibly important good for the community. You buy it in 20-litre jerry cans. And I guess with the palm price increasing from 450 euros last year to 900 euros, it has a huge impact on the basic allocation of palm oil for the basic salary. To put it in layman's terms, it's almost like a landlord coming along and putting a 40% increase on your rent overnight, which is obviously something that hasn't happened, and people have been shielded in that market. So we do our bit with the community in terms of the palm oil players, the refineries, and the farmers have looked at a smoothing mechanism. So at the moment, the price that we expect to receive is around about 800 euros a tonne, which might be up to 100 less than potentially the international price. But the quid pro quo is, we're talking about extending that price at that level of 800 euros, even if the international price does drop. So we benefit, obviously, of having better sight of really strong prices for a longer period of time, and for us, absolutely great if we can achieve 800 euros throughout the entire high season, and that would certainly set us up with some fantastic half-year results.
You also have a responsibility to your shareholders, and I can see that you're issuing crude palm oil production figures on a monthly basis. You have been upfront and said this is to provide shareholders with increased visibility on operations during the global COVID-19 pandemic. But when the world returns to normal, will you continue these monthly reports?
That's a good question. I think initially I wasn't a huge fan of the monthly results because they can, the timing of a few days either way can skew outcomes and perhaps mislead on the upside and the downside. But the more that we've been producing them, and the more that I've spoken to retail shareholders, how they like the visibility, even knowing that it perhaps leads to a bit more volatility, is moving me into the camp of continuing in this way. I mean, clearly it makes a lot of sense with global macro volatility to be as transparent as one can. I don't think anything's changing in terms of global volatility in the next 12 months. So at this stage, I would be leaning to continuing to produce these numbers monthly. As a board, our job is to act in what's in the best interest of shareholders, and if I keep hearing from shareholders that they like the monthly results, then I'm more than happy to present them in this way.
Okay, so in terms of transparency, we know that cashew production is on course for Q2. Any firmer updates on timing?
Yeah, still Q2. The Gantt chart at the moment is showing late May and into June, so it's always tight, but it looks like we can get there in that period. There's one last shipment to come in about 2 weeks' time. It's nothing essential in terms of the assembly right now, but that will take off in the next couple of weeks. So having all goods on site is a critical milestone. But we'll put up some more videos and pictures in maybe next week. People can quite quickly see that assembling work inside the two main infrastructure buildings is taking place and moving along. It's all under turnkey contracts with a daily and weekly Gantt chart assessing progress. So we're pretty strongly of the view that we're going to be on schedule and commissioning in June, and as I said, making sure first sales start to take place in Q3, which for me actually is the most important thing, is just seeing those first sales and seeing the gross margins that we can achieve, because the internal view is the margins can be quite good, certainly higher than the palm oil. And I think once we can express that opinion to the market, we're in a great position to scale up that cashew processing plant from the initial 10,000 to up to 30,000 tonnes, with a strong belief that the raw material is there to achieve it. And I think that will de-risk that scale up tremendously once we see the margins. We look forward to moving that business to its full capabilities, which I think could be a great business for us, and it's an exciting moment. But yes, there's a lot of hard work to be done over the next 6 months, both to deliver the palm oil high season and to deliver the cashew into production and the margins we want from it.
Okay, see, I know that you've already expressed that you are aiming to produce record financial results for the palm oil operation in 2021. How confident are you? Are you still confident?
As confident as you can be, at the start of March, so there's still a little bit of water to go under the bridge, particularly in terms of interims and half year. We've got nearly 4 months to run on the palm oil business, but the sustained high prices and the volumes at the moment of the key driver of achieving that on the palm oil business are looking really in our favour. I'd like to emphasise that we're talking about the palm oil business. The cashew business, of course, in the first 6 months is not producing, so it'll be running at a loss, but we think it can quickly move to a situation where it can be relatively EBITDA neutral as it becomes profitable in the second half of the year. So the revenue line that we did in 2017 of about 30 million euros, we'd be very confident that we're looking to beat that just on the palm oil business alone, let alone the cashew coming in, and the margins are looking reasonably healthy at the moment. So there's certainly a big chance of exceeding those 2017 numbers, which would be a wonderful outcome in such an odd environment to be delivering record results.
So you're very slick when you describe what's going to be happening in 2021. Unfair question. 2022, what's on the horizon?
Well, I think here, obviously the crystal ball comes out then in terms of palm oil prices. I mean, from a macro point of view, there's still very big shortfalls of crude palm oil around. It's really tricky to work out as we, come out of these sort of partial lockdowns around the world. How that demand supply will continue to work. Clearly, you'd expect less disruption to supply and perhaps more soy planting to bring on extra stock. But from a demand point of view, as we all re-enter the world, one would think demand side is going to be quite buoyant as well. So whether we have super prices, I'm not sure, but I think we've got pretty strong, robust prices on palm oil. So I think that bodes well for 2022, and clearly the step up in the business is going to come from the cashew. So that'll be the first full year of cashew production, cashew margins, as I said, that we think we can start to communicate to the market in Q3. If they look at like we think they do, will no doubt lead to a step up in the revenue and the profitability of that cashew business standalone. That should push the group results as well. So a little bit too far ahead, and I think a lot of work for us to do, but there's a huge amount to be optimistic about with Dekel, and I think we're in a nice space, and soft commodities, the markets are very supportive for us right now.
Thank you. Lincoln Moore, Executive Director of Dekel Agri-Vision, thank you very much indeed for joining us today.
Thanks, Sarah, my pleasure.